Namaste, Sat Sri Akal and Adab. This is your host and host Sunil Jhaveri, also known as Mr. Bond in the mutual fund industry, welcoming you back to another episode of One on One with Mr. Bond. My today's guest, I have interviewed him in the past also. He wears many hats. He is a fund manager for Motilal Oswal ELSS. He is a fund manager for Motilal Oswal Large and Mid Cap. He's a fund manager for Motilal Oswal now Manufacturing NFO, which is coming up. He's a fund manager for Motilal Oswal Small Caps. His hands are totally full. And it's very interesting to speak with Ajay because last time when I spoke to him, we had interviewed him during the NFO of Small Cap of Motilal Oswal. Since then to now, markets have only scaled new highs. What we are going to discuss about is the China plus one theory, which is being touted, where the manufacturing, India will be the beneficiary for manufacturing in terms of outsourcing and moving away from China. But as we all know, there are many such countries who are vying for that post of China plus one. Are we in a sweet spot in India in terms of capturing the China plus one story? Why manufacturing story currently? What are the themes in that? And what are the valuations currently? Are we still comfortable or not? Welcome, Ajay.
Thank you, sir.
So, let's begin with the China plus one theory. This is the story where the manufacturing starts. Manufacturing story starts as far as India is concerned. But, our former RBI governor, Raghuram Rajan, had mentioned that we should be concentrating more on the service side rather than the manufacturing side. If you give me some thoughts on that, is it a fallacy or is it the right way of going about? Is the government going the right direction of concentrating on manufacturing through defense and other sectors?
Right. So again, thanks for connecting. So coming to China and how India is placed and whether we can be a manufacturing hub. So my thoughts are, sir, see, we in the past, if I have to look at manufacturing, we have focused less on value added part of manufacturing, more on where there was a labor arbitrage. But now in this new avatar, we are looking at value added manufacturing.
Okay.
Now, this requires skilled labor. This requires technology. We need to be cost leader in most of the things that we have to do. So how our auto industry actually scaled, and now you look at any company across the globe, any OEM in auto, our auto ancillary companies are catering to them. So I think that template is again going to be used in now the manufacturing that India is talking about, where it will not be concentrating on only domestic market, but export market, being technologically savvy, most cost efficient. So I think this is, and we can balance both services as well as manufacturing. So we don't have to choose one.
Yeah. So what I hear you say is that so far we were concentrating and thinking. Our thought process was that because we have a cost advantage, cheaper labor, cheaper electricity, etc., that's the reason why India can be a good manufacturing hub. But what you are saying is much beyond that. There will be many more value-added, products and services which will benefit the manufacturing hub which is moving away from China. The natural reason for moving away from China is, of course, the dictatorship kind of a government there, the lack of transparency and continuity of government policies, the trade wars which are happening, and that's the reason why people are looking to look at other hubs and countries where the manufacturing can be moved out. Now let us dwell on each aspect of the manufacturing. We between India and China, we have almost a 40% overlap of products.
Correct.
The advantage which we have versus the other countries, which is our competitors, which are Vietnam and Thailand, is the rank on quality of port infrastructure, number of major ports, container capacity, coastline, availability of labor costs per month, and land acquisition costs. So if you can throw some light on how India is competitive versus their other countries which are also vying for the China plus one.
So, sir, in terms of electricity, for example, all these businesses in manufacturing, because there is an upfront cost involved, you need these factor of production clarity on them. So power, for example, as you spoke about. Now, in terms of power, at least we are seeing that there is continuity of power now. Businesses that we speak to, they are not complaining about now the power availability. And in terms of cost, we are say at 6 rupees on a blended level, which is now at, I mean, cheaper than even China.
So we are cheaper in terms of the electricity cost advantage. We are cheaper than Singapore, Philippines, Thailand, China, Vietnam. So we are after Vietnam in terms of the cost per electricity.
Correct. So our electricity cost clearly, and when we, even if we look at from future perspective, when NTPC, BHEL, the kind of plans they have, we know that we are gearing also towards the, even if there is rise in power consumption, which we are seeing by adoption of EP, when data center demand is going to increase. So we are seeing that we are gearing also ourselves up that if there is increase in demand, we are prepared for it. Even in this season, if you look at the peak deficit, we have not heard the kind of problems we encountered
No,
earlier.
this summer was really at its
And
all-time peak.
summer was bad, yes.
Absolutely. Now, what
So,
about the corporate tax rate? We are competitive versus the rest of the world.
so if you look at the even in terms of taxation, we are fairly competitive. We are better than most of the countries that you spoke about, whether it is Philippines, Indonesia, Korea, Malaysia. So we are at say at corporate of 22%. I think we are better placed compared to even China. At a similar rate with Taiwan and Thailand, they have little better rate than ours, but by and large, I think even our corporate rate is fairly competitive compared to all these
And
countries.
government is giving us some concessions in some of these manufacturing industries at a lower corporate tax of 15%. Is that correct?
Yeah, so effective rate after considering all the incentives for some of these businesses actually turn out to be 15%, as you rightly pointed, and
Right.
which for a manufacturing company turns out to be lowest if we compare all the countries that we've spoken about.
Now let's talk about the government infrastructure push. Government is right now working on a single engine, so to say, because government is pushing and spending a lot on infrastructure. The private capex has just started, so we will talk about that. But let's talk about the government infrastructure push, which is almost 11 trillion rupees spent, which is going to be spent in 24-25, which also shows the policy continuity.
True. So, if we have to look at the spend on infrastructure, I think last year only the road sector has seen subdued inflows. Otherwise, whether it is number of airports, ports, railways, I think we between 3 to 5 times we are seeing that kind of
Yeah,
in,
last 10 years, this is the kind of spend which you're talking about in different sectors.
yes. And even now, if we look at the various schemes for government, how they are trying to augment our infrastructure, I think we expect infrastructure spend to continue for next 10 years, and you can expect similar kind of growth in infrastructure. Because see, for a manufacturing country to succeed, as we spoke about some of these factor of production, logistics also becomes a very important cost.
Correct.
And we are fairly inefficient in terms of logistic costs. We are at 12.5, 13% of GDP. Globally, it is 8.5%. So that 4-5% makes a lot of difference in terms of your manufacturing processes.
So that will only improve once these ports, airports, and the roadways come into place in a much bigger scale.
Correct. So,
Right?
sir, we have some inherent advantage as you spoke about some of these things like coastline. I mean, we are almost in terms of,
7,500 kilometers of coastline,
yes.
which is the
So
largest, I think, in the world.
correct. So we have structural benefits which so far we have not explored. And if these things, if uh, executed in a better way, I think these structural benefit will make a lot of difference in overall cost of production for manufacturing, which is most important. So I think we are well placed. We have good supply chains now. We have technology, labor side also. We are solving problems, and as you explained, in terms of labor, we are among the cheapest now. So I think we are well geared to become a manufacturing powerhouse.
Good. Now tell me now, so far government has been pushing the pedal on the infrastructure spend. What about the private sector? We are seeing the capacity utilization now growing slowly and steadily upwards only. So there is a saturation point, 75% or above or 80% and thereof. Saturation points happen, and that's where the new capacities start to get built up. Are we seeing that happening currently, as far as the private sector capex is concerned?
Yeah. So you are right. When we are talking to different industries, we are seeing that the order book inflow is clearly suggesting that private capex, after reaching at 74-75% utilization, that they are looking at capacity expansion. So by and large, private capex is around 8.5 lakh crore this year. And when we look at the number of project inflows for whether it is manufacturing,
A lot
electronic.
of projects, new projects are announced in manufacturing, electronics, electrical machinery, electrical machinery, construction material, chemicals. So we are seeing a lot of order book which is happening. Is that all in the private sector?
So if you consider all these industries, most of them, the business will come to private sector.
Okay.
So you can understand that that will eventually flow to all the manufacturing kind of businesses. Because when a steel plant, cement plant is going through a capex, mostly the machinery that is required is catered by the private sector. So yes, we are seeing that kind of businesses coming to private sector.
So private sector will spend and invest in the capex only when they see demand push. Now the demand push is a little on the lower side as far as the our country is concerned. So how do you see this demand supply situation where it's a catch-22 for the private sector? Should I or should I not increase my capacity? Is there enough demand for my products and services? So how does that get solved?
So even in terms of demand, I think what you are referring to is more about the consumption from the retail side for
Correct.
non-discretionary kind of demand, which slowed down after COVID because of inflation. But
Right.
by and large, in terms of manufacturing companies and B2B businesses, the demand has been fairly robust. So when even if I have to break it up, whether the large industries such as cement, steel, they are also going through now looking at capex. Seasonally, this quarter could be a little slower in terms of taking the price hike, and because it has been an election year, plus the summer has been fairly strong. So near term, there has been little slowdown in consumption, but by and large, if we look at the B2B part of businesses, they are doing exceedingly well.
Okay. Now let's talk about the some of the potential leaders in the current capex cycle, and I see that because we have spoken to quite a few fund managers from Motilal Oswal, these seem to be your themes also. Electronic manufacturing, China plus one, make in India, defense, power and energy, auto, capital goods. So if you can just throw light on the current leaders, potential leaders in the current capex cycle, and how they are fitting well with your themes within the MO basket.
So as you rightly pointed out, as a house, we look at sectors where there are strong tailwinds, which we say in a sense that these are the house themes, which effectively means that there are strong earning coming into the sector, which clearly helps the earning acceleration. So currently, if we look at the sectors again, from manufacturing perspective, I'll just give you a broad idea. They are almost even in if we have to look at the whole manufacturing piece. There are so many subsectors in a sector. So even in capital goods, if I look at, there could be machine tool companies, there could be equipment companies, another machinery companies. So what we are doing is we are trying to figure out which are those sub pocket of growth where the businesses are seeing acceleration in growth momentum. At the same time, valuations are still reasonable.
Right.
Means that within capital goods, not that everything is expensive. We are finding still those businesses. For example, the sectors I told you. In auto ancillaries, again, we are finding there's good traction coming from the two-wheeler side, tractor side. Even on exports, we are seeing that a lot of these auto ancillary companies are coming up with new products. So they're gaining more client wallet share. So auto ancillary is another sector where we are fairly bullish. In terms of power and energy, as I told you, renewable is doing again very well. Even if you look at the recent news items, you will find that renewable acceptability order tendering is increasing. In Make in India, again, the infrastructure ancillaries where sector where we are finding good traction. Specialty chemical, bulk chemical is still doing well, but specialty still yet to see improvement. So the data still suggests we are maybe 3-6 months away from that demand revival. Electronics manufacturing is another space where we are seeing a lot of traction. So what is happening here is these mobile companies, even if you look at the Taiwanese majors, they are coming to India trying to set up their manufacturing. These Indian companies, they are increasing content per product. If we were catering to one, say, one model, now we are adding another model to it. So sub 10,000 smartphone category is another category which will see demand coming, improving there. So I think semiconductors, electronics, some of these mobile related plays, we are seeing traction in all these
So what I
spaces.
hear you say, Ajay, is that there may be sectors which may look very expensive, but within the sector there are sub-sector and sub-themes where you are finding a lot of value in terms of investing. Am I right?
Absolutely, sir. So we have to really see the data, try and figure out which are those pockets, because some of the names which are widely held, there maybe price action is more than fundamentals. But if we really dig down deeper, we are able to find businesses and some of these subsectors that I spoke about where I think there is fair value at a good, reasonable price available.
Great. So China plus one can only work not only in terms of using it for domestic consumption, also for exports. Because what is China plus one? That, China being the manufacturing hub for the world, from where goods and services are getting exported. And if that is going to be relocated to India, that means there has to be an export thrust also. So we are seeing export thrust also within these sectors, which is chemicals, pharma, industrial machinery, electrical and electronics and automotive. We have shown some growth of 15 to almost 20% in each one of these segments. So is that the correct way of looking at it? That not only domestic consumption, but it will help the export industry also.
Right. So, sir, as we are discussing about manufacturing, I think we are at a nascent stage where, as you spoke about some of these sectors, the addressable market opportunity is almost 5 to 10x of where we stand. If
Wow.
we look at the listed companies, their overall revenue and the profit pool, the overall, if we executed well, this opportunity could be north of 5 to 10x. So just give you some example. I mean, these are huge sectors. Electronics, electrical, it is 150 billion kind of opportunity. We are
Wow.
hardly addressing anything.
Now, what are the sunrise industries we are talking about, which can catapult Indian economy to 10 trillion? The semiconductors, the EMS, the EV and the batteries, the green energy, defense and manufacturing, GVA. So what are these industries? And we are seeing that this can be almost 2x to almost 5x kind of or 12x kind of an opportunity. The sunrise industry, which can take the manufacturing in India to a trend $10 trillion economy in a very short span of time.
So this is what I think the difference which is happening where instead of when we think of manufacturing rather than percentage of GDP, we are looking at the value addition part of it. So as you rightly mentioned, the ideal term should be GVA, where
GVA.
we're doing the value addition part of it, where we are increasing content and we are adding more value to the client. So here in terms of EV, it can be again a 10x opportunity. How it will happen is first we will do the basic part of how it started even with mobile and in auto also we have done where you start with first assembling, then you keep adding to the value addition part of it.
All the sunrise sectors, they are not the sectors which were so far talked about as far as manufacturing was concerned. They're just
Correct.
they are just cropping up as the markets and dynamics change.
Yes. So imagine the size by value addition in some of these sunrise sectors. If we get it right, the opportunity is almost 2x of our current GDP. So
Wow.
just to give you perspective, this is the kind of opportunity we have. And see, we have seen this in different industries. How it started in IT services, where now you look at where India is. Similarly, it happened with, in financials, some of the sectoral shift that happened. So if we execute it well and if we continue to capitalize on this opportunity, adding to our skill set, the size of opportunity is so large that there could be many winners. And the
So,
size of
Ajay, we talk about demographics, how India is very well placed in terms of the middle class and the working class versus the other countries, etc., etc. But those are numbers, but it does not percolate down to the actual figures unless and until the government executes their policies well. So these are opportunities. What are the things which the government needs to do so that we capture these opportunities and take a pie of that opportunity into the India fold?
So I think continuity of policy is extremely important. Now, even if you look at last 2 days, there is change in a state about labor laws. So those kind of uncertainties, when you put up an upfront capex, it brings some kind of confusion to the investors and manufacturers. So one is continuity of policies is extremely important. I think we have seen that.
Right.
In terms of budgetary allocations, we are seeing that there is continuity of those kind of policies. So Atmanirbhar, for example, indigenization in different industries. Every week we are hearing that there is improved new list coming up where we are seeing there is more indigenization thrust is given to industry. So some
The
of
biggest
these things,
example is defense, I guess.
correct, defense is clearly one that example. And when we talk about PLI, for example, given for so many industries, at least 4 or 5 industries have seen the benefit coming out of it. And unlike previous schemes, here it is more on your performance after delivery, reaching certain milestones. So it is a win-win kind of a situation. It is not that after paying how it used to be during a tough kind of a scheme, where the actual benefit never came to the ground. Here, the policy,
Exactly.
yeah. So we have reason to believe that these policies are well framed and it is a win-win situation for both the participants. So I think there will be continuity in policy.
So
But
government is cognizant of this opportunity and they need to grab that opportunity with the putting the right framework in place and continuity of policies. Now let's
yes,
talk about the macro Goldilocks period, which we are talking about for India as a country also. One is the inflation is under control or going towards the lower side of the spectrum. Then, of course, the repo rate, which is at an all-time high right now, but it's at its peak. So from here on, it can only go downwards. So that interest rate scenario, which we are also likely to follow Fed, hopefully September onwards when Fed starts to cut rate, we will see some kind of an action from RBI also. The forex reserves, which are growing almost 100 billion over the last 1 year, 650 billion is a huge amount of forex reserve.
true.
So these are all the at the current account deficit, so which was a surplus in the last quarter of financial year 2024, which is a after a long time we've seen that surplus kind of a situation. Crude being under control, of course, there is a slight spike currently, but otherwise overall crude has been under control. Your INR depreciation is also very resilient against other currencies. So these are all the macro 2 lakh crore of dividend by the RBI to the government. That gives a lot of room for the government to spend on the infrastructure space versus containing the fiscal deficit also. So if you can throw some light on these are the macro factors which are extremely good for the Indian economy, and that's the reason why markets are cheering the way they are cheering.
So, sir, you're absolutely right. I think you have summarized it well. Even any of the parameters we look at in the past, whatever could have played spoil sport, all the parameters are looking healthy. I would add the PSU banks' balance sheets, they are also healthy. So there is no particular part of economy where we are seeing that the risks are building up, which eventually can blow. Also, I would like to add here that it's not that everything is hunky dory. There is the consumption at rural, at lower income group. It is still, little,
Struggling.
uh, yeah, low. So we are seeing that these factors will help in improving the income flow to the at least some sectors of economy and our country, which so far have not seen the benefit. But by and large, the macro is extremely favorable with India now included in bond index.
Are you expecting the weightage of India going up in the MSCI Emerging Market Index in September when they recalibrate?
Correct. So if you look at, we have been gaining our weight in the indices, and even
We've
now,
grown from 8% to almost 19% now.
correct. So that is there. And given now the float and market cap of our country, I think that will continue to increase. So on both on debt side, equity side, we are seeing strong flows. And even the ETF passive flows are fairly strong. There are countries which were not, too keen to invest in India. We are hearing that money is coming from those countries also.
They will have to invest because of the weightage, index weightage.
True. And so we are hearing, sir, in terms of flows, in terms of macro, I think we are fairly well placed. Micro also, wherever we are seeing. So, for example, rural is now looking up. So we are seeing that at least by and large, I think India is doing well placed to take benefit of this manufacturing cycle peak.
Excellent. Now let's talk about the construct of the index itself. Because the index, the way I see it, if Nifty 500 index, automobile weightage is 7.5%, manufacturing index it's almost 30.4%. Capital goods is 6.1%, in Nifty 500 it's 23.5%. So the construct of the index itself of manufacturing index plus the large cap is in manufacturing index is almost 66%. 31% is in mid cap and 3% in small cap. So basically, it's a large and a mid cap kind of a story. So if you can just throw some light on this construct and how does this benefit or otherwise for the investors, the manufacturing index itself.
So, as you explained, almost half of the Nifty 500 companies fall into manufacturing category.
Okay, so that's more of large and mid cap.
Yeah, in terms of even market cap, almost 40% of the companies fall into manufacturing category.
Okay.
So there is decent representation, and what we spoke about that the opportunity is fairly strong. Uh, there could be a very differentiated exposure to investors by investing in manufacturing based theme based mutual fund schemes, because as you explained, there is fair difference between the top five sectors of manufacturing versus index versus top five
500.
sectors of Nifty 500. So I think there will be different opportunity. And the good part is these sectors that you spoke about, which has high weightage in manufacturing index, are the ones which are part of our house themes. So clearly we are better placed to capitalize on it. We have been working on these themes for last 2-3 years. Our existing portfolios also have right representation. But this theme, again, because it is a manufacturing index, I think because we have worked so much on these themes, uh, clearly we will have a portfolio which will reflect higher earning compared to a manufacturing index or a Nifty 500.
So it shows in the performance also. Last 2 years from July 2022, if you see the performance of the index, manufacturing index versus the Nifty 500 TRI, huge difference, 37% versus almost 26%. So, and then that's the reason why if these are your house themes, you are on top of the charts in practically all the segments where you are managing money.
So, yes, sir, you're right. See, that is the trick. We have to make sure that our portfolios reflect those sectors and stocks where the earning tailwinds are the highest. And generally, if you look at our portfolios, our earning, our portfolio earning is far superior to index. So whether it is large or mid cap, whether it is mid cap or small cap, in terms of quality, which is ROE, ROCE, in terms of earning profile, which is say REP's growth, and in terms of valuation which is price earning to growth, because you have to see the price, the valuation in terms of the growth profile.
Growth going forward.
Yes. So we clearly construct a portfolio which is better than index. And yes, these are the things why our performance across schemes has been holding up. So yeah, you are right there.
Now let's talk about the big elephant in the room, the valuation. Why
Sure.
NFO at this current stage, and what do you think about the current valuations, and how do the investors expect to earn returns on these manufacturing NFO? Because if the corporate earnings don't keep pace, right now the price to earnings are not looking so expensive because the earnings growth is there.
True.
So if you can throw light on the valuation currently and why NFO at this stage.
So first, let's take the question of valuation and then why at this point in time.
Sure.
So in terms of valuations, sir, again, if I have to look at Nifty, mid cap, small cap, 1 year forward, maybe FY26, we are looking at Nifty at say 19 times. We are looking at mid cap around 22, 23 times. Small cap little higher at 24 times.
Forward earning.
Yeah, forward earning. But the earning profile is fairly different. And what we always say is that valuation always reflect your risk which is there in the economy. Now, in terms of macro, you spoke about the risk. In terms of micro, if I have to look at the risk, is mainly reflected through balance sheets. Now, even for these manufacturing and small mid cap companies, the leverage is at a decadal low.
Okay.
So when you look at manufacturing, now why we are coming to the manufacturing NFO, because the manufacturing business requires upfront capital commitment. And this is where I think the best part is these businesses are at best of their health. They're trying to capture growth. So they are putting up more capacity. And we are still able to find businesses which are below 25 times forward price to earning. So recently, again in last 3 months, we have added some 3, 4 stocks in our different schemes, which are below 25p. So it is more that you have to go try and figure out where the business improvement is happening, and then you are finding right valuations also. So as I said, there is pocket of some froth, but at the same time, sir, there are sectors which have not
So your
performed.
QGLP will take overall QGLP will ensure that you're not buying it at expensive valuations or at any valuations, but you are buying good stocks at good valuations.
Correct. And so you can see all our recent NFOs, their performance clearly reflect that we have been following our philosophy, sticking to it, and just executing it well. As I think Indian manufacturing sector needs to execute it well. Same is true for us.
Sure, sure. Your parting thoughts, Ajay. It was really a pleasure, but your parting thoughts, would you like the investors to know at the current juncture? What are the risks right now in the market, and what should they be avoiding?
So, sir, I would say that every time there is bubble in market, it is when everyone is extremely confident. When you look at markets now, almost half of the participants are extremely cautious.
Okay,
So, yeah, so everyone, so see, your questions have been more about valuation. You have been
valuations.
sounding extremely cautious, right?
Correct.
So, we are very cautious at this point in time, because in the past we have seen that if earning momentum fizzle out, if there is some part of economy which is showing pain, if there are large risks building up, eventually markets correct. But I want to again remind you of 2002 to 2008, market went up 6 times. Still,
Yes.
there are 5, 6 events when correction happened between 15 to 30%. So
Oh, okay.
it's not going to be a linear growth trajectory. There would be some kind of corrections, but as we spoke about, if the potential is almost 2x, 3x of our overall GDP in manufacturing, if we execute it well, I think there will be a lot of winners. I'm sure there will be some losers also. There will be some businesses which will face challenges. But if we execute it well over a period of time, I think this is another structural story in India because we have all the right.
It's a long-term structural story. It's not a short-term fad.
Yes, absolutely. Because we have right ingredients which are required to succeed.
Correct.
So I think investors should look manufacturing as part of their portfolio allocation.
As a core portfolio allocation, not a strategic, tactical allocation.
No. And please do not think of short term, near term. Please use your advisors like yourself. Well, and then I think with right hand holding, lot of wealth will be created with right allocation, understanding the risk. So that is what I have to say.
Thank you so much, Ajay. It is always a pleasure having you on my show. And all the very best for your NFO. As usual, I'm sure a lot of wealth will be created for the investors who will invest in these NFOs, plus the NFOs which they have invested in your basket of schemes. And I've realized that, Motilal Oswal does not come out with an NFO just for the sake of a asset aggregation. They come out with NFO when they see a story panning out. And that's the reason why you're coming out with another NFO currently. Thank you so much.
Thanks a lot, sir. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.